Good evening, guys. It's Saturday, November 13th. My name is Dave Coker, and this is, of course, Talking About Finance. Let's see what's going on in the markets and what me and my buddies have been chatting about over the past week. As usual, we open up by looking at the S&P 500, and we were off to a good start. The S&P 500 closed up 5 basis points on Monday. I'll take it, right? But overall, we traded down about 31 basis points. It was sort of a mediocre performance for reasons we'll get into a little later. Not even sector specific, very company specific. My gosh, speaking of companies, look at Tesla, upper right hand corner, consumer cyclical, the bright red, down some 15.44%. What happened? Well, I know. If you don't, you probably want to read up on it a little bit. Just to give you a little short explanation, Mr. Musk, and far be it from me to give him advice, he blagged about selling, and we know he had to sell some stock. So he tweeted about selling some of his holdings, and lordy mercy, look at Tesla on the week. Wild. Got whacked in a major way. The VIX traded up north of 18.5 on Wednesday, closed down for the week, 16.29, well below the long run average, roughly 17. The 10-year closed at 1.57. It gained about 6 basis points on the week. Oil, still north of $80, up some 66.5% year to date. So what's driving stocks? Just the consensus of me and my buddies on the Telegram channel. Inflation concerns. CPI came in hot, 6.2%, freaked a bunch of people out who weren't properly positioned. But on the other hand, keep it in perspective, guys. The S&P 500 over the same period of time, up 23.8%. So look past it and plan. Fed rate hikes, second factor. Yeah, we're starting to get clarity. We're looking at the dot plot every day. We're talking about it. Looks like one rate hike in 2022. Guys, when they raise rates in the States, they don't go up 100 basis points at a shot, 25 basis points, maybe even a little bit less, considering where we're coming from. We'll have to watch this. It'll be interesting. And finally, deflation. Yeah, many of us are concerned about what happens after the inflationary spike that we're currently working our way through. It's a reasonable question. But regardless, we do know that there's inflation. We know there's inflation in the system, and check this out. Look at, my gosh, look what Germany is up to compared to France and Spain. Germany is planning to raise the minimum wage by 25%. So they're not going to nickel and dime the citizens and raise it 2%, 3%, something like that. They're going to do a short, sharp shock, 25%, and help those people live decent lives, because inflation is really, really bad. Inflation, as I often call it, and other people have called it this as well, it's the cruelest tax. And here we got spending by different income levels. And you can see the poorest people, they spend the most on necessities, food and energy, than higher income households over here in the fifth quintile. So it's a big problem there. And the Fed, of course, is being very disingenuous. Some of the governors are talking about how this is transitory. I don't think so. Once again, from one of my research reports sent to my clients about a week ago, PPI, I baselined it at 100 on October 1st, 2016. And we can see right now, January 2021, 128.7, still continuing upwards. Guys, this is producer price index. This is not consumer price index. In other words, I'm so sorry. Aren't you glad you're remote? That way you can't catch it. No, I don't have anything. I'm just joking. Right. But in any case, you can see these producer prices are getting fed into the system, and the producers of services and goods, they've got a choice: pass it all on to the consumer, absorb it themselves, or a mixture. Well, they really can't absorb it all themselves. So we're going to see what happens. In reality, it'll be a little bit of each. They'll absorb some, they'll pass some on to the consumer. I bet the consumer is going to get most of it. And this is manifested or supported, I should say, by some evidence we're getting. Check this out. Now, if you're not American, I'm American, and I can tell you how Americans view Thanksgiving. It's a significant holiday. Families all get together, and we sort of hang out and probably eat too much, drink too much, and then the fighting starts, especially when politics gets brought up. But in any case, check this out. We're looking at 2020, 2021. My God, the price for the same bird has actually gone up significantly. Not really good for anybody, least of all the bird. The bird's going to be eaten no matter what. Somebody's getting some money off of this. It's really supply and demand. There's not much supply there. Now, the thing is this, a lot of people are blaming the Fed, and they've got all sorts of oddball ideas. And this is an interesting one. One of my friends put it up, we were talking about it. And of course, as usual, I think you know me by now. I have opinions. I'm not shy to share my opinions. And he's saying that we should all buy meme stocks. There's other ways. And what I've been doing for the past, 20, almost 30 years, I only buy dividend paying stocks. I only buy property. I buy gold and silver. Oh, and Bitcoin for fun. But Bitcoin really only started about 6 years ago. I've been buying Bitcoin, as you guys know, every week, except for a brief hiatus, about a 10-month hiatus. I've been buying Bitcoin every week for quite a while. And really, if you think about it, if you buy dividend paying stocks, if you buy property, which is essentially the same as a dividend paying stock, you put up the initial cash flow and you collect rent, you're fine. Some of my dividend paying stocks have actually increased dividends, and significantly last week. I was quite pleasantly surprised to see this huge increase come in. So I'm not saying it'll protect you from everything, but I am not going to be buying meme stocks. There's like no way that I'm going to be doing that. Still, the reasonable question is, we're all going to work. We're all struggling. We're all trying to make our money every day so we can cover our costs and put something into Bitcoin, put something into dividend paying stocks, put something into property. And some other people just aren't working. Here I've got the employment population ratio. And check this out. It's really wild. We can see when we take a look at it, September 2021 is at the same level as February 2014. Roughly 51% of people in the States are working that could be eligible to work. It's really, really wild when we start to look at this. It's really interesting. We're going to have to see who's working and what the hell is going on back there, because I'm not so sure about this overall. And finally, the last thing is we think rates are going to go up. A lot of people think it's good. And I do wish we were back in the pre-global financial crisis days. Look at interest rates back then. Here what I've got is I've got the 1-year constant maturity treasury. I got the 3-month constant maturity treasury. And you can see back before the global financial crisis, roughly 5%. This is government securities. Private bank or private entities such as banks were paying 7 to 8%. My God. You could live off the interest on your savings. Not so much anymore, but they're starting to lift off. And yeah, this is good, isn't it? Well, think about this. Yeah, on one hand, interest rates going up, definitely good for savers. I'll raise my hand here. I'm one. But on the other hand, what does it do to stock prices? And refer back to your discounted cash flow analysis to figure out how to value a stock. The denominator represents the risk-free rate, the discount rate, which incorporates the risk-free rate, I should say. And as the numerator gets bigger because the risk-free rate is rising, the quotient gets smaller and stock prices fall. Fortunately, we're looking at one rate hike in 2022. Appears to be well telegraphed. Of course, the wild card is, what if the Fed sees something and they do an emergency rate hike? It's happened before. Yeah, stocks don't perform well there. So think about all this. All right, guys, thanks so much for your time. My name is Dave Coker. You're going to have an excellent week. I want you to invest in dividend-paying stocks. If you got the excess liquidity, buy some property. Definitely get some Bitcoin. See, we didn't even talk about Bitcoin this week, but I did buy Bitcoin last Friday, and I'm just acquiring, as you guys know. It's going to be a great week. We're entering the end-of-year period when we move into a Santa Claus rally, and Santa's going to bring you profits. Take care, guys. Have a great week.